Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Thursday, May 11th, 2023, and I'm pre-recording this Trading Places Live for just a little bit later this morning. Currently, we see futures are a little bit mixed, mostly lower. Dow futures down 121 points, S&P 500 futures down 6, NASDAQ futures are up about 4. That's the way it's been throughout the night, most of the morning, with NASDAQ leading on a relative basis and the futures mostly bifurcated, some up, some down. Crude oil down about 28 cents, still a little bit above $72 a barrel. U.S. 10-year Treasury yield 3.39%, back down below 3.40. And that's 4 basis points lower than what we saw yesterday. So 10-year Treasury yield continuing to drop after that CPI report. The April CPI report came in yesterday morning, and that was right about as expected. The headline number rising 0.4%, and the core number, which strips out food and energy, that also rose 0.4%. Both of those numbers were exactly what was expected. So what I've been saying is the market, I think, at this point, in a better mood. You can tell that with the volatility index, which is back down in the 16s. And that just tells us that the market can handle bad news better. It would take probably a series of some bad news to really get that VIX going and get the market, moving to the downside. But for now, I think the market is handling the news. And especially, I thought the news yesterday was good. Anytime, the market is expecting that inflation's at a certain level and we come in at that level, I think that's a win for the bulls, because as long as things are going according to expectations, I don't think the Fed is going to consider raising any further. So for me, it was a win, but just matching expectations, I think will prove to be a pretty good sign for the bulls, and I think we'll probably continue to see the market move to the upside. One down piece of news this morning from a more bearish perspective, Pacific Bancorp, that's PACW, PacWest Bancorp, PACW. They came out and announced that their deposits were down more than 9% last week, and the stock is getting hit again in pre-market. The latest there, let's see, PACW this morning down 25%. So it closed yesterday at 608, currently at 458. I'll tell you, I always watch relative strength, but in the case of the banks, I think it is really paramount that you follow relative strength. These banks, small, mid-size, regional, or more local type banks, these are the ones that are most at risk. And if they're underperforming, I wouldn't touch them, because PACW had bounced off of its recent low. It was down around $4 not that long ago, maybe $4.25. I would say that was maybe 3 or 4 trading days ago. And it went all the way back up to 7 and change. But if you're looking at relative strength, this is a really poor looking bank. And sure enough, more bad news coming out. One of my favorite sayings in the stock market is, there's never just one cockroach in the kitchen. And when you get some bad news and you get a stock that's really underperforming, you better be prepared for more bad news. Holding overnight stocks that are underperforming, I think, is incredibly risky. And we see exactly what that can mean today with PacWest. We'll talk a little bit more about PacWest and look at that chart at the end of the show in the 3 you must see. Let's talk about the agenda here for just 1 second. We'll start off with the daily market recap. Then we'll go into talking technically, chart of the day, software. I want to show you how you can quickly go through and pull up, some potential stocks in an industry group that you happen to like. And I really happen to like software. Earnings spotlight and the 3 you must see. But let's go ahead and get started. Let's take a quick look at the daily market recap from Wednesday. So the Dow Jones Industrial Average finished down 30. The S&P 500 up 18. NASDAQ up 127. So you can see, looking at the percentages, Dow Jones lost 0.1%. S&P was up nearly 0.5%. NASDAQ up more than 1%. Mid caps up less than 0.2%. and small caps up about 0.4%. So overall, pretty good day. The Dow lagged, but we came up. It was pretty volatile after the CPI report came out. We had a really nice move up in futures. The market took off in the morning, came back down. Most of our indices were red. I think the NASDAQ may have gotten back right to about break even. And then the last 2.5 hours of the day, lots of buying into the close. That's something that we have talked about. I have talked about for the last year. Morning weakness, afternoon strength. Morning weakness, gap downs, whatever, afternoon strength. It's been a theme going back for a year. It's how Wall Street, the big Wall Street firms, accumulate shares. They can't do it at the opening bell. Not enough liquidity. I know some are saying, well, this is short covering. Yeah, this is a lot of short covering. We're talking about 7 months now of short covering. Yeah, I don't think so. This is not short covering. Short covering was what we saw back at the beginning of 2022 after we had steep drops and we'd come back up for a few days and then go back down to new lows. That's what short covering looks like. What we're seeing here is accumulation. We've been seeing it for a while. Now we've got the indices moving higher. I think you've got to go along with what's been happening, which is early morning weakness, if we see any, followed by afternoon strength. That's been the pattern. It's been that way for a long time. I've been talking about it, and it continues. Anyway, technology up 1.2%, real estate up 1%, almost 1%. Utilities up about 0.9%. Communication services also up about 0.9%. Those were your four leaders. Notice the two top performing sectors of 2023, technology, communication services, right in the thick of things again as the NASDAQ makes a new high. Really important and very bullish. To the downside, lagging, energy. Energy down 1.13% yesterday, falling back. We're now trading below that 20-day. The 20-day has crawled below the 50. So we've got that death cross. PPO's negative. This has been a crazy group because every time you think it's going to the upside, it reverses to the downside. Now it looks like it's going to the downside. So I don't know, maybe it's a buy. This one's not really been behaving very well from a technical perspective. But just looking at the chart, you can see it's obviously been a very weak relative performer. Just looking at these other four groups, maybe it's kind of on par with real estate to some degree. But look at technology. Looks like a bull market. Look at communication services. Looks like a bull market. It's not exactly what we're seeing in energy, so we got issues there. Moving on to the 10-year Treasury yield, I do want to mention that we'll have the April PPI and the core PPI coming out at 8:30 this morning. So by the time you listen to this recording, it will be out. So check the numbers. The expectation for April PPI is a rise of 0.3%. Core PPI rising potentially 0.2%. So we've got the March numbers, which were much lower. March was negative on PPI, both headline and core. So we are looking for that to pop back up again. But again, those are expectations. We've already got that built in. Unless numbers come in way above, I don't think they will. But if they do, that will, we'll see how the market reacts. It's not just whether the market goes up or down, by the way. Look underneath the surface. If a car is not running, you don't just stand outside the car and say, yep, it's not running. You need to open the hood. You need to find out what's going on inside. Stock market's the same way. Yeah, maybe it's going down or maybe it's going up, but you've got to pay attention to the rotation, to the leadership. A lot of intermarket relationships come into play in order to really evaluate what's going on in the market. Recently, the S&P 500, and we'll take a look at that. Let's move on to talking technically here. But you see the recent sideways action in the S&P 500. I showed a chart to our members yesterday at Earnings Beats. If you look back over the last 2 to 3 weeks, while the S&P is going sideways to maybe down a little bit, all of the growth ratios I follow are soaring right now. Growth is crushing value. Why would the big Wall Street firms be repositioning into growth ahead of the go away in May period and ahead of this nasty recession that we're about to have? And if you still are clinging to the inflation that we're going to have high inflation. I just have one question. Why, when I look under the surface, does money keep rotating to growth? Why, for the last 5 or 4.5 months, why do we have technology and communication services crushing all the other sectors? Why is all this money rotating into those areas? To prepare for Armageddon? I don't think so. I've said all along, stock market bottomed. We're going up. And with my signals pointing higher, I'm not listening to any of the rhetoric on CNBC and paying attention to any negative news until I see the charts change. Technicals, price action, that's what matters, not the news. When I let my guard down and start reading news articles, it's so easy to get swept up in all the horrible stuff going on. Right now, there's talk about the government's debt ceiling, and the fact that we're, going to default on our bills. Do you not have a memory? This goes on every year, pretty much. I think I read an article the other day. I don't know if it was 69 times or 79 times that we have been faced with this same crisis. And do you know how many times the U.S. has defaulted? 0. They will raise the debt limit. They'll come to some agreement. Maybe they'll have a temporary fix. The media loves to tell you how bad things are going to be if they don't get this fixed. They always get it fixed. Ignore it. Ignore it. It gets so frustrating for me because all they do is just pound on the bad news. Meanwhile, the NASDAQ is threatening the August high. I've got an industry group that just broke out yesterday, a very key industry group. And we're going to take a look at it in just a few minutes. Just broke out above the August high. The key groups that lead the stock market are starting to leave that August high in the dust. Technology already went through the August high. The rest of the market's going to follow suit. We're getting leadership where we need to be getting leadership. And sentiment is so bad. Folks are, in my daily market report a couple of weeks ago, I gave to members a survey that was out on CNBC.com, and it showed that only 24% of investors believe now is a good time to get in the market. Only 24%. The lowest, I think it was a 17-year history of the survey, the lowest ever. And then I'll see some analysts talking about how sentiment is too bullish. I'm like, what sentiment are we looking at? I'm seeing the equity-only put-call ratio soaring. I mean, the VIX is coming down, but that's good. That's expected volatility going forward. When that's down, that's bullish. Anyway, I could go on and on about that. The S&P 500 right now, though, we're putting in a series of higher highs, higher lows off the October low. There's your August high for the S&P. Still need to negotiate that. And before we can do that, we need to negotiate 4179. So that's a level to watch here. NASDAQ, once again, another new high, getting closer and closer to that August high. That was at 13,667. We closed at 13,347, 320 points away. That's roughly 2.5%. Wouldn't take much. One strong day, and that could be gone. We continue to trend higher. I don't know how anyone can keep clinging to the bearishness, especially as long as the charts look like they do. At least wait for a breakdown. Anyway. All right, I'm going to give you the chart of the day. Before I do, if this type of thing interests you, go over to my website, earningsbeats.com, and I publish a newsletter, free newsletter, 3 times a week, Mondays, Wednesdays, and Fridays. All it takes is a name and an email address. Hit that subscribe button. You're in. No credit card, and you can unsubscribe at any time. Today, I just wanted to pull up Microsoft because it is a leader in the software space. Notice the August high on Microsoft was down at 290. We're now over 310, continuing to move up. AD line looks great. Look at the relative strength. Microsoft just absolutely crushing software stocks right now. I think this one looks good. Looks to me like it wants to continue going higher. And check out software relative to the S&P. Strong group and a leader in a strong group. That's what we look for at earnings beats. We're going to be having our top 10 stock picks. Our portfolio draft is what I like to call it. Next Wednesday evening, where we will put the 10 stocks, equal weighted stocks that make up each of our 3 portfolios at earnings beats. We have a model, an aggressive, and an income portfolio. I got a feeling you might see Microsoft in one of the 3 or maybe more. Microsoft looks good. Anyway, if you're interested in that and you do want to see what top 10 stocks we like in each of our portfolios, go in and subscribe to our paid service. No cost 30-day trial. You can check that out and join us. We have a lot of upcoming events, a lot of good stuff that I think you would really like. And again, at no cost, 30 days. Moving on. Okay, so let's move on to the industry group. You may have already figured out software is where I'm going here. So let's take a big picture look first. Here is just the daily chart for the last year. There's your August high. Guess what? Yesterday, on pretty heavy volume, software broke out above that August high. So we now have the software group up near 4,900. We were at, 4830, 4840. What is that number? 4841. Now we close at 4885. So we have a beautiful breakout in software. I think this is a group that continues to go higher. One other thing that I like to look at is I like to look at this relative strength. This is a 3-year relative strength of software relative to the S&P 500. Check this out right here. From November, this was the NASDAQ high in November of 2021 through basically the lows. We weren't quite at the lows. We were pretty close to the lows on the NASDAQ. Anyway, NASDAQ 100 at the end of December. We were pretty close to those October lows there. During this entire period, software struggled on a relative basis. Look at it in 2023. Listen, the S&P's having a good year, NASDAQ's having a better year. And if you want to outperform both of them, you need to be in groups that are outperforming. Look at software. It has exploded. If you're not in to software, I don't know what you're waiting for. It's a beautiful uptrend. One other thing on software. Let's look at the seasonality. I know they say, hey, go away in May, right? Well, I can tell you that software, since this secular bull market started in 2013, May, June, July, and August, the next 4 months, software has averaged going up 8.4%. We've got relative strength telling us we want to be in. We got the absolute chart breaking above the August high, telling us we want to be in. Now, could we get a pullback? Sure. But that's what I would use to get in if we pull back. If you want to get in now, you can get in half a position if they're individual stocks you like. And I'll show you in a second how you can find individual stocks that you might like. Then if you get the pullback, get into the other half. Or if you just have patience, you want to sit back, see if you can get some kind of a pullback, do that. If you don't like to chase. But I'm just saying the next 4 months, I've been telling members, do you know that the IWF, which is large cap growth ETF, versus the IWD, which is a large cap value ETF, the IWF growth versus the IWD value, growth outperforms value over the last 11 years by a total of 4.9% throughout the year. From May to August, it outperforms by 5.1%. In other words, large cap growth gets all of its outperformance over large cap value during the 4 months that we just started, May 1st. I mean, if you want to see what that looks like, do it real quick. I'm going to run out of time. There. IWF versus IWD. Last 11 years. If you add up these 4 months, that's 5.1. Add up the year, it should be 4.9. This is where we get all the strength in growth stocks, the relative strength. What are those that are going away doing? They're not benefiting from it. They're going away. Good luck. I'm going to stick with it. One other thing I wanted to show you, though, on that Microsoft seasonality, or maybe it was software in general. Probably going to be the same with Microsoft. But I want you to notice that over the last 11 years, look at July. It's gone up every year for the last 11 years. And it's averaged going up almost 4% in the month. I find stuff like that hard to ignore. All right, so now we're at, all right, so we know we like software. What do we do from there? How do we capitalize on this? Well, I'm going to show you how I would capitalize on it. If you go down here, actually under scans, just pick up a new scan. And I'm going to go ahead and put in here that I want to have at least 300,000 average volume. And let's say over 50 days instead of 20. But that's just the default scan. And then all I'm going to do is add one thing down here under sectors. Actually, I'm going to add two things. You want to go all the way down to technology, select software, add it. Then the last thing I'm going to do, there you can see now the group software. Then I'm going to go down here and I'm going to grab scooters. And you want the best performing scooters. How about, let's just go over 80, scooters over 80 in the software space with average daily volume the last 50 days over 300,000. So that takes care of liquidity. This gets us filtered into to a group that's doing really well. And the scooter over 80 is a relative strength kind of a filter. Let's run the scan. What do we have? We got 57 of the top software stocks right here to pick from. And click here. You can put them in a chart list if you want, but click here and rank them. Shopify, one of the hottest. IoT is one that I've provided our members recently. Duolingo, another big one. MongoDB. I mean, we know Microsoft's doing well, but look at, there's others that are doing really well. And I can tell you the focus has been on large cap. So that's why I pointed out Shopify and IoT, Samsara. They're both large cap. MongoDB's large cap. So you can do it. You can sort it by scooter and also by large cap. So here's your large cap at the top. Here's the top scooters. Boom. How fast did we just zero in on some of the best performing software stocks? This is a list that you might want to kind of keep handy because these are the leaders in a group that is crushing the S&P 500. I mean, Shopify has been absolutely on fire since its earnings report. We'll probably get a pullback at some point. That's fine. But I think Shopify is going a lot higher in time. All right, how about earnings? Let's go over just a couple of these earnings real quick for the earnings spotlight. Disney beat 93 cents versus 89 cents. Let's take a look at the pre-market action, and it's down $5.50. 95.64 looks like it's breaking down beneath these previous lows. Could bring $90 back into play. Be careful with Disney. Trade Desk in the software space. Look at this one, up 3.6, breaking out. Here's another leader for you. Stocks reported. By the way, Trade Desk, 23 cents versus 10 cents, bottom line. DOX 147 versus 146. It's trying to hang on to support here, and it's down $1.25. Be careful. Watch. Make sure we don't break down on the closing basis there. This morning, JD reported, and JD is up. JD did beat 69 cents versus 60. This is a stock that's been in a very deep downtrend, just a spiral to the downside. It's up $1. But really, what does that mean in the scheme of things here? The question is, can we hold the support? And then can we start to trend above those moving averages? That's what I'd be looking for there. Now let's move on and let's talk about PACW here. So this is the 3 you must see. This is what I'm talking about here. Look at actually, let's put this on a relative chart. Look at the relative weakness on this stock. You don't want to be in these if they're this poor. So yeah, it's been moving up, stock down, what would I say, 25% at the open. Stay away from stocks like this, not just in banking, in any industry group. If it's underperforming, there's a reason why. And you don't have to be beaten over the head with it. Just follow the charts. All right, next up, now, this is one in the software space, breaking back up above its moving averages. Look at that AD line. I think this is one that could begin to really start to move to the upside. Keep an eye on this. And then, hey, Google, did you notice yesterday? Big breakout. This is the highest it's traded since back at the end of August. Big move up, heavy volume, AD line strong. Looks like Google wants higher prices. All right, that's it for me. I appreciate everybody tuning in. That's it also for the week. So join me next Monday on Trading Places Live over at Earnings Beats. Take care out there. Be careful. And hey, don't call it a bear market anymore unless we see breakdowns in the charts. Have a great day, everybody. Happy trading.